Hey everyone, welcome back to the channel. Has your portfolio also been swept up by a green storm lately? That's right, I'm talking about the name investors love and hate at the same time, NVIDIA. Not long ago, NVIDIA stock price surged nearly 5% in a single day, adding over $230 billion in market value. That's equivalent to creating another Coca-Cola in just one day. And it all started because of a conference in Washington. Jensen Huang, the prophet of the AI era, ignited the global capital markets with one speech. At the GTC conference, NVIDIA announced a new system called NVQ Link, designed to connect quantum computers with AI chips, a move that positions NVIDIA at the forefront of the next computing paradigm shift, ensuring it remains central during the transition from classical to quantum computing. Beyond that, NVIDIA is partnering with CrowdStrike and Palantir to infuse AI capabilities into critical enterprise-level applications. This signals a strategic shift from merely providing general computing power to delivering deep, vertical solutions for specific business problems, strengthening NVIDIA's grip on enterprise markets through greater penetration and stickiness. The most thrilling news came when Jensen Huang revealed that NVIDIA is sitting on $500 billion worth of AI chip orders, equivalent to 1.5 times the total global semiconductor market in 2024. That figure is far higher than the market's previous $400 billion estimate. And these orders aren't just from tech giants like Google and Microsoft. They also include 7 supercomputing projects commissioned by the U.S. Department of Energy. The largest one uses 100,000 Blackwell GPUs and is directly linked to nuclear arsenal research. This means NVIDIA has evolved from a commercial enterprise into the infrastructure core of America's AI strategy, backed by the weight of national intent. Following the GTC conference, NVIDIA stock price skyrocketed, pulling major index ETFs along with it. But the big question remains, is this the start of a new bull market or the last frenzy before the bubble bursts? Hello everyone, I'm your wealth strategist, Daryl Hart, with 25 years of market experience. Today we're going to take a deep dive into the logic and risks behind NVIDIA's $5 trillion journey. No hype, no bias, just data and logic. We'll move from the macro landscape of the global AI battlefield to NVIDIA's unshakable moat, dissect its financial anatomy, and end with a clear roadmap for investors. Buckle up, let's begin. NVIDIA is known as the arms dealer of the AI era, the brightest star among the Magnificent Seven. But as its stock price rockets upward, every investor is asking, how much higher can NVIDIA fly? Is it still worth getting in now? Or are we witnessing the peak of a massive bubble? First, we must clarify one fundamental truth. What's driving NVIDIA isn't the semiconductor cycle, it's the tsunami of artificial intelligence itself. Its data center segment now contributes nearly 90% of its revenue. What does that mean? It means NVIDIA isn't just the thermometer of the AI revolution, it's the generator. Since ChatGPT exploded onto the scene at the end of 2022, AI has ceased to be a science fiction fantasy. It's now widely regarded as the core of the fourth industrial revolution. Some analysts predict that by 2030, the global AI market will reach a staggering $1.8 trillion, growing at a compound annual rate of over 38%. That means the market could double roughly every 2 years. More aggressive forecasts, like those from Cathie Wood's ARK Invest, suggest AI could spawn a $30 trillion super industry. And friends, this isn't hype, it's real money. Over 90% of global corporate executives believe AI will provide a competitive advantage, and the capital markets have already voted with their feet. AI stocks have outperformed the broader market by 25%. That's proof enough. In the early days, everyone jumped into the large model arms race, ChatGPT, Claude, Gemini, and so on. But now the trend is shifting toward smaller, more specialized, and safer models. The rise of DeepSeek in early 2025 and Meta's open-source Llama strategy are both lowering the costs and barriers to AI application. Geographically, the battlefield is crystal clear. The US is the undisputed leader, home to 60% of the world's top AI talent and nearly half of private AI investments. Cloud giants like Amazon, Microsoft, and Google are NVIDIA's super clients, but they're also its potential future rivals. Many people compare NVIDIA to the shovel seller during a gold rush. That's only half right. NVIDIA doesn't sell ordinary shovels, it sells intelligent, fully automated excavators, along with a manual and after-sales service to operate them. Its hardware, the GPU, is indeed the cornerstone. AI training and inference simply can't happen without it. But NVIDIA's real strength lies in something even more powerful. Its software platform, CUDA, which has built a moat both wide and deep. Are AMD's chips cheaper? Yes. Are they close in performance? Even better in some cases? So why do customers still line up for NVIDIA's chips, paying 3 to 5 times more? The answer is the CUDA ecosystem. Launched in 2006, CUDA has, over nearly 2 decades, created a massive path dependency among global AI developers. Almost all major AI frameworks and tools are built on CUDA. Want to use them? Sorry, that means you'll need NVIDIA chips. That creates a powerful lock-in effect. In comparison, AMD's competing ROCm platform arrived a full 10 years later, and its ecosystem gap is enormous. It's like everyone's been using Windows, and you suddenly introduce an unknown, incompatible system. The switching cost for developers is just too high. Even more counterintuitively, NVIDIA is, in essence, a software company. Over 75% of its employees are software engineers. At its core, NVIDIA delivers a chip plus software plus industry solution full-stack service. From data centers to autonomous driving and robotics, it embeds itself deeply in each scenario to solve client problems. This hardware-software synergy is precisely what AMD and others can't easily replicate. But no matter how good the story sounds, we still need to look at the numbers, and NVIDIA's numbers are nothing short of jaw-dropping. A gross margin of 75%, peaking at 78%. What does that mean? It's comparable to the world's most profitable luxury brands and software firms, not what you'd expect from a hardware manufacturer. Behind it lies absolute pricing power. A top-tier H100 GPU can sell for over $40,000, and it's still in short supply. Financially, NVIDIA is rock solid. Its debt ratio is below 10%, far below the danger threshold. Since the AI boom, its free cash flow has nearly doubled from $8.1 billion in 2022 to $16.8 billion in 2025, a 138% jump. Revenue hit $36 billion, up 94% year over year. The company projects Q4 revenue of $37.5 billion, slightly above Wall Street's average forecast of $37.09 billion. That means NVIDIA isn't short on cash and has the firepower to keep innovating. In terms of relative valuation, NVIDIA's forward PE ratio is about 31x, 22 points above the S&P 500 average, yet still within the 25-40x range typical for large-cap tech stocks, and even below its own historical average. In absolute terms, discounted cash flow models suggest a fair value around $190 per share. With the current stock price breaking past $200 for the first time, it's now trading above fair value. For short-term options traders, $200 is also a key psychological and technical level, one that could attract momentum inflows. So the conclusion is clear: the market remains fundamentally bullish on NVIDIA's outlook. But there's a massive elephant in the room: the killer consumer AI app hasn't emerged yet. Many AI companies are still burning cash, with profitability a distant dream. For NVIDIA, that's both an opportunity and a risk, because if downstream monetization stalls, can upstream demand for compute power really stay this hot forever? Global tech giants, Microsoft, Amazon, Google, Meta, are spending hundreds of billions of dollars annually in a historic build-out of AI infrastructure. But here's the uncomfortable question. Aside from Microsoft's Azure cloud business showing meaningful growth, has anyone actually seen large-scale, cash-generating, high ROI AI applications? This all-in but no payout environment has cast a fog of doubt over the sustainability of this compute arms race. Think about it. If enterprise clients and developers can't turn this expensive compute power into real economic value, then isn't the current boom, built on lofty expectations, essentially a castle in the sand? Once major clients start taking a hard look at ROI and tighten their AI budgets, NVIDIA, as the core supplier of compute power, will feel the hit most directly. This isn't just a financial issue, it's a test of faith. Investing in NVIDIA means believing that AI will inevitably find its path to mass commercialization. But faith alone requires evidence. Let's now turn to the competitive landscape. It has fundamentally changed. In the past, NVIDIA's main challenge came from linear competition, traditional rivals like AMD playing catch-up. But today, the battlefield has evolved. New challengers are emerging from unexpected directions. In October 2025, Qualcomm officially entered the data center AI chip market, launching the AI 200 and AI 250 series optimized for inference workloads. Its strategy is noteworthy. Instead of fighting NVIDIA head-on in the high-cost training segment, Qualcomm is targeting the potentially larger and broader inference market, leveraging its mobile expertise in low power consumption and efficiency to offer cost-effective rack-level solutions. Its first client, the Saudi AI startup Hamine, plans a large-scale rollout, a clear signal that NVIDIA now faces a formidable, differentiated rival in the inference space. But the biggest long-term threat doesn't come from external rivals, it comes from NVIDIA's own customers. To control their destiny and cut costs, cloud giants like Google, Amazon, and Microsoft, as well as automakers like Tesla, XPeng, and NIO, are all racing to design their own AI chips. For now, they still rely on NVIDIA's hardware. But over time, these dual sourcing and in-house strategies will inevitably erode NVIDIA's pricing power and market share, shaking the foundation of its dominance. Looking even further ahead, if AI computing itself undergoes a paradigm shift, such as a breakthrough in quantum computing, or if NVIDIA's CUDA ecosystem is disrupted by more open, efficient alternatives, its stock won't just face volatility, but a true value reckoning. Ladies and gentlemen, in summary, we're standing at a critical crossroads. NVIDIA's path forward is no longer smooth. It faces demand-side risks from slower AI monetization, supply-side pressure from both old and new rivals, and existential threats from potential technological disruption. So, should we buy? There's no one-size-fits-all answer. It depends entirely on your risk tolerance. Currently, Luria maintains a buy rating on NVIDIA with a target price of $210. If you're a conservative investor, consider holding it indirectly through ETFs to diversify your risk. If you're trading short-term, you might take a small position, 5 to 10% of your capital, on pullbacks near the $200 level, but always use strict stop-loss discipline. If the stock breaks your threshold, it may signal a market correction. Be ready to lock in partial gains. If you're investing long-term, if you truly believe AI is the defining megatrend of the next decade and that NVIDIA's moat will hold, then buying now and holding over time may be justified. But never go all in. Use a staged entry strategy, add on 10% dips to average down, and avoid chasing peaks. Also, keep an eye on early November's earnings season. If NVIDIA's key clients like Microsoft or Meta report stronger than expected AI capex, it could give NVIDIA fresh momentum. Ultimately, NVIDIA's story is one of belief in the massive economic potential of the AI revolution, and in NVIDIA's ability to stay ahead of the curve. It's not a stock you can buy blindly. It's a technological benchmark that demands constant monitoring and deep understanding. In this vast AI ocean, NVIDIA is undoubtedly the biggest ship, but the seas are rough. You must decide whether to be a brave sailor or just a spectator on shore. For every investor today, making the right decision requires unprecedented prudence. You must look beyond the near-term orders and revenue and focus on the horizon, beyond the narrative of AI's promise and into the reality of its progress. If you're feeling lost in today's market storm, or if this analysis helped you see things more clearly, make sure to subscribe to the channel and turn on the bell. Every week, I'll bring you in-depth insights into macro events, actionable wealth strategies, and guidance on asset allocation and risk management. I'm Daryl Hart. See you next time, and may your investment stay smart and steady.